Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. We're going to take off the free trial page there at the right. And today folks, we actually have markets that are pursuing their yesterday's rebound. I'm going to focus on 2 particular sectors, mostly the resources, energy, and mining sector, where we do have some stocks that are interesting for those of you who want to increase your long exposure on those sectors, because those are the sectors that are leading the rally today on the American and also on the Canadian markets. And we're also going to take a look at your question. The question bar is open, so if ever you have any questions, feel free to ask them. Now, with the market situation though, we have a market that are having a rebound. And the reason why markets are rebounding is because interest rates have been rising on bond yields. So this is actually some thing where investors are expecting the economy to be stronger. They started in the Eurozone because we had good economic data for the GDP. So now we have it in the US. So when we have interest rates that are going up, usually investors say to themselves that it's a fact that the economy is getting stronger. So potentially the Fed is going to raise interest rates. So why not buy the markets? Because so far we still have strong economic data that are coming along the way. So we have the NASDAQ here that is rebounding. However, on a rebound like that, should you be on a buying spree? If we stay technical though, we still have this resistance that's at 5,100 points on the NASDAQ. So it definitely continues to remain risky if you're buying some positions on the NASDAQ today, knowing that at 5,100 we might have a pause. On the Dow Jones, we're actually reaching this 18,000. So as long as you do not go above 18,086 though, I think it's kind of risky to actually open long positions on the Dow Jones. Actually, we need to have a clear reversal of this downward trend. On the Dow Jones, the sector that is mostly responsible for the rally is mostly the financials in the US. But even if the sector is showing a clear breakout, clear bullish cycle, most of those stocks are actually either pursuing the rally or not breaking out, except for TD, which is breaking out, but it's in New York that it is trading, that is breaking out. Target 4627. We have most stocks that are doing the same pattern as Radian Financials, RF on New York, pursuing the rally. Same thing for KeyCorp, same thing for PNC Financial, same thing for a stock like a Wells Fargo. Well, Wells Fargo, it's slightly different because we could consider that stock as a breakout there because it actually broke out here, stabilized, and now it's breaking out again. So it's one of the few exceptions in the financial sector. And this is a sector that stays strong. If you're not comfortable to buy stocks in the financial sector, one alternative that you could do on the US is to buy the bullish ETF, which is FAS on the financial sector, that today is clearly breaking out. So I think with that ETF, you get a wider exposure on the sector and you'll be able to actually benefit from the pursuit of the rally on all those major stocks like Wells Fargo, Regions Financial, Citigroup that are pursuing their rally. So this is actually what we have in the US, but it's remain a situation where you should not be in a buying spree, but gradually increase your exposure. Now on the TSX, what we have a slight also pursuit of the rally, but the TSX, we need this index to go above 15,000 to actually believe that this rally could be strong enough to be in a buying spree. Now let's take a look at two particular sectors where I think there are some buying opportunities. First one, the energy sector. It's a sector where we actually have the pursuit of the rebound, but the sector still remains within its downward corridor. As long as the sector doesn't go above 220 points, it's still not an opportunity to actually be in a buying spree on the energy sector. So what you should favor, as I said yesterday, is that favor stocks that have resisted to this decline. So for instance, Parex Resources, I was mentioning that stock yesterday. Today it's a breakout. Yes, it's an entry point on Parex Resources. Exit point $10. Canadian Energy Service Tech did perform better when the energy sector was going down. That's an entry point. Exit point $7.36. Advantage Oil and Gas, clear breakout there. You could favor that stock. Exit point $7.36 below that support. Mullen Group could be next on the line. Grentura Energy also as well could be next on the line, higher than 382, and also Precision Drilling higher than 885 could be next on the line. So among the list of the energy stocks, though, if we take a look at this list here, all those stocks you see that are highlighted with an S are all stocks that could potentially start breakout if ever the energy sector goes above 220 points. But on MarketGurus.tv, we actually want to remain cautious because it's normal that we have a rebound after 200 days of decline in the last few days. But the thing is, we have to remain cautious to not rush our moves to close all of our short positions and to over increase our long position, because we see that the potential of this rebound remains kind of limited, especially with the NASDAQ, the Dow Jones, we saw the index, and also the TSX. So at 15,000, we have an important support where we might just test it today, and tomorrow we might go down because there's several indicators that are expected next week. We have also the FOMC announcement, I think, or the FOMC minutes this week, right? The FOMC minutes? No? Okay, so we have nothing this week, but definitely we're going to have indicators next week. That's going to actually give us a clearer direction. So I think you should remain cautious, even if there's some buying opportunities in the energy sector. Favor stocks that have resisted to the decline. In the next segment, folks, we're going to take a look at the mining sector, copper, steel, and also a lot of stocks in the copper sector. So on the steel sector, what we do have a confirmation of a lot of stocks that are starting to form a base. Today we have Ternium, that is a clear breakout there for Ternium, but potential until 2150. Other stocks are confirming a more solid bottom, such as Valley. I think Valley is an entry point today with an exit point at 626. Arshco confirming a bottom on that stock. So you could actually start to build up your exposure on a stock like that. Buy some, exit point 1574. And the good thing is that if you're buying some stocks like that, your exit point is not too far away. So your loss potential becomes kind of limited. Same thing too for Nucor. If you buy Nucor, respect this upward trend. So you know that if you trace all this upward trend, connect all those bottoms, the exit point becomes out at $48 on a stock like Nucor. Gerdo confirming a bottom, exit point at 274. On the copper sector, a lot of Canadian companies are doing the same. We have Freeport-McMoRan, that is actually also confirming a clear bottom. This is the thing you should look for in terms of what stocks should I shop for in the mining sector. First of all, look at the stochastics, 93 stochastics, see if it can be towards the 30-40% range. And also look at, one thing I love to look at is the histogram. Is the 7287 MACD histogram starting to be in positive territory? If you do have that, I think you might feel more comfortable to actually acquire some stocks like that and put your exit point below that support. So for Freeport-McMoRan, we have a stochastic that's around 30%. First criteria met. Second criteria, histogram and positive territory. So that would be a stock you could buy. Exit point 1935. Copper Mountain, do we have that? Yes, for the stochastics. Yes, histogram, not so sure yet. So if you want to have some Canadian exposure, I would say there's a risk that Copper Mountain might not deliver as much, might not rally as much. So if you're buying Copper Mountain, the good thing is that it's only increasing by 3.97%. So your exit point at 120 below that support is not that far away. So you have a less loss potential on a stock like that, but you do have a stochastic that's confirming the wave of the buyer's momentum on a stock like Copper Mountain. So that's the strategy you should favor on the mining and steel stocks that today are confirming a more solid bottom. Now let's take a look at some questions. We have some questions from Mark yesterday. He was asking about NWC. So NWC, Northwest Co. I think they're going to release their earnings tomorrow for Northwest Co. Now, is it where is it an entry point? Is there an entry point? It's not an entry point on that stock. It's neutral. This is where I see some targets on that stock. First of all, I see that if ever the stock breaks out, 24.50 becomes the target. So are you willing to get into a stock like that? Well, if you're in more for the medium to long term, okay, I would say, because your exit point is at 23.40. Right, so 23.40 as an exit point if you're buying it today, 24.50 as a potential first stop for a stock like that. But they're expecting their earnings are tomorrow, so there's a risk aspect related to that. The fact that the company has pursued its decline for the last few months, it's something that's kind of not so positive for Northwest Co. So there's that risk on a stock like that. And I think when you have market conditions like that, where we cannot confirm that several sectors are starting a bullish cycle, where we see that the upward potential is limited, buying stocks that are still within a neutral formation, within still a downward trend, I definitely think it contains more risk. And we definitely cannot say that we have a consensus where most investors are more bullish on the market and there are some bargains right now on the market. I think it's more consensus where investors are waiting or don't know what's going to be the next direction, and this is why I think you should remain really cautious on a stock like that. Now, when should we enter in PBMD? PBMD, it's kind of clear that it's above 250. That's the entry point. Exit point 192 on PBMD. That's a stock that is explosive. On marketgurus.tv, you can have access for free for 10 days. We will publish a list of the stocks that have been explosive in the past and that could continue to be explosive. So PBMD is a stock that fit that criteria. So 250 for an entry point. As for LPTH, a stock that has already pursued its rally. So on LPTH, what you could do is that I would look at the intraday chart. So if I put, for instance, a 30-minute here, 250 period on LPTH, for day trading, I see that the entry point is clear at 190 on LPTH. So LPTH 190 as an entry point. Favor day trading on the stock like that, because when a stock has surged by so much, it's not a stock that should hold on overnight. So 190 as an entry point. Whenever you make a 5 or 6% on the break of 190, take some profit on LPTH, and it's not a stock I will feel comfortable to hold overnight for LPTH. So we're gonna take a quick break, and I'll be back with you for the other questions.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. So we have one questions from Dan. Will the rally in energy stocks last a few days? What do you think? Well, for us, Dan, we're remaining cautious. Yes, the energy sector is one of the best performers. However, you see there's a lot of congestion there. 50-day, 10-day, 30-day moving average are all meeting around 220. So if the energy sector doesn't go above 220, we find it risky to actually open a lot of long positions. This is why what I said is that you have to favor stocks that have resisted to this decline. So a stock like, for instance, Parex Resources, Advantage Oil and Gas, today a great fit opportunities for those of you who want to build up some long exposure on the energy sector. So Paul is asking me, could you analyze PXT? Well, PXT is a buy, Paul. Today, you have to put your exit point on that stock around $10 for PXT. Really a solid breakout on the stock like that. Now, as for the target, what I would suggest you to do is to put a Fibonacci retracement from that top to that bottom. Now, you see that the next target becomes around 1178. So, buying point today, $10 exit point, 1178 as a target for PXT to actually take some profit. Now, can the rally continue? Well, there's a risk that we might stabilize along the way before reaching 1178, but so far there's slightly some room to go before we reach the oversold situation on the stochastics. Now, Carly bought here AST on Amex at 920, sold 500 at 977 today. Get out at what price, you mean? Well, I think you did a great move if you bought AST. It's an Amex, right? Now, you bought that stock when the stock just has reached its 50% retracement, right? Great point. It was also the 100-day moving average. Now, what price should you get out? I think you should get out clearly if the stock goes below 889, below that 50-day moving average. So for me, that's a clear exit point on a stock like that. As a target, 1026 for another profit-taking opportunity because there's a lot of congestion there with the moving average, and it also corresponds to a support. So 1026 as another profit-taking opportunity, exit point 861. Now, could you, for day trading, do you scan relative to the opening price or to the previous day close? Well, on MarketGurus.tv, when we make the list of the stocks that have to be watched before the markets open, we usually do a scan with the previous closing. Now, during the day, whenever the markets have already opened, what we do it is with the last closing. So that's actually what we actually do before the markets open, previous closing, and when markets open with the opening price, or dernière ouverture on French here on the software. So that's actually what we use to do our best day trading opportunity. Now, as for the best picks of the day for day trading is ETSI. So that's actually our best pick. If we take a look at this stock here, give some entry points here, another one there. Now it's stabilizing, so the next entry point is going to be at 1775 on ETI. And there's also Alliance AOI on New York that actually performed really well, gave 2-3 entry points on that stock. Now it's stabilizing, so the next entry point is going to be at 250 on a stock like that. So overall, folks, yes, markets are going up today. We believe that this rally could be short-lived. We want to see markets confirming a clear break of their former resistance. TSX above 15,000, Dow Jones above 18,000, SPY above 212 points, NASDAQ above 5,100 points before confirming that we should close all of our short positions. If you want to open some positions on the energy sector, it's okay. Favor stocks that have resisted to the decline. Parex, Advantage Oil and Gas, those represent great technical patterns. Mining and steel stocks, a lot of them are confirming a bottom. Great opportunity to build up your positions, but make sure you put your stop loss in those positions because the Chinese economy is not doing that great, but those stocks are confirming a bottom. So put your stop loss to limit your loss potential if ever some data come out and we have a wave of sellers on those stocks. So that said, see you at 12:30 on the Swing Trading Show on DecisionPlus.com.